Welcome everyone to, I believe this is now our 11th CDX Roundtable, and excited today to be talking about the future of investing. And we want to talk a little bit about, not only just the future of investing, not just generally, but also in these sort of really crazy times and times of uncertainty. And both Edith and Jennifer are out in the Valley, and a little bit of the state of the Valley as well, and how they're feeling. And what the sentiment is out there. So I'm Drew Ianni. I'm the founder and chair of CDX, which is part of the Techonomy family. It's great to be part of the Techonomy family here. And we've been doing these digital roundtables since there are no conferences at the moment, but hopefully sometime in the, I don't know about near future, but maybe in the next 6 months or so, or in 2021, we'll all be able to get back together, and I'll get to see a lot of familiar faces out there that I see here attending. So I'd like to get rolling, and we're going to do quick introductions and then just jump into the conversation. I'll go alphabetically. So Edith, if you can just do a brief introduction and your background and tell us just a little bit about Race Capital, and then we'll move to Jennifer.
Hi, Drew. How are you? Hi, Jennifer. Thank you for having me. My name is Edith Young. I'm a general partner at Race Capital. Race Capital primarily focuses on seed to Series opportunities. We do a lot of investment focusing on enterprise developers tools, API. I know Drew for many, many years, back from starting with the App Nation days.
Yes.
Used to work on Dolphin browsers, a lot of mobile app related things. I think we're definitely in the new era. So we're also really interested in like any open source data, ML. These are things that we're super excited about, but definitely a lot more enterprise and developer focus.
That's great. Thanks. Jennifer.
Hi, thank you. And I'm excited to be here and looking forward to the conversation today. So Mighty Capital, we're an early growth Silicon Valley based venture firm. We focus on investing in companies that build great products and can therefore build great businesses. So some of the companies we're in include DigitalOcean, Airbnb, Amplitude, Mission Bio. What makes us unique is that we provide exclusive access to a group called Products Account, which is a business acceleration platform for our portfolio as a network of the most influential product managers in the world. And we help our portfolio companies go into there to drive sales, hire talent, meet M&A partners. And because of that value that we bring to the table, we co-invest with top tier VCs and a lot of B2B tech as well. We also like personalized medicine, genomics, where it intersects with big data and traditional IT. And we're in a couple of consumer marketplaces such as Skylar and Primary Kids, where they're leveraging tech to really drive value at scale.
That's great. Thank you for the introductions. And this question will be for both of you. We'll start with you, Edith. And just in the last, suppose the last few months and just everything we've been going through, how has it affected either of you in regards to just your approach to investing, your feeling about sort of the startup environment? Has it changed your investment thesis at all? And just is what's different about, today and then moving forward, I suppose more importantly, that COVID and even, the social justice discussions have brought along. Edith, I'll start with you and then Jennifer.
I have to say the year of 2020 is full of confusion, and I'm so glad that we made it to July 1st, but unfortunately we're still staying at home, and 2020 is far away from being over. So this is one of those times, I don't know about how Jennifer feel about it and how Drew, and we're literally in like 3 places right now, and all probably at an office or at home. I think what's going on with the world is the first time we really have to reanalyze on the macro level how it's impacting everything. The way for venture capitalists, for us, for our industry, but also for all our companies. And B2B and B2C is quite different. But just to set the stage, I think there's a lot of layoff. There's already, in Silicon Valley, over 60,000 people already lay off. More than 500-600 startups all laying off at the same time. Everybody working from home. There's a mass exodus of CEOs. Q1 companies like AT&T, Groupon, they left. All got fired. It's a different. There's a lot of CEO left. Over 300 of them, and there are big fight between China and US, which is
Right.
another turmoil. There's a lot of racial injustice, and you're seeing venture capital firm are take a look of ourselves, like, hey, we need to be aware of what's going on. We need to be more inclusive. So, and COVID. So this is definitely a very, very exciting and confusing years. And I think for us, I'm practically living on Zoom almost 24/7, including even seeing my mother. I need to be on Zoom. So we, as a VC for investing, we're super excited. We pulled a trigger last week and signing paper this week. We have someone that I never met in person, and we are investing. So this is something that
Is that the first time that you've ever invested and had not met the person?
Yeah, my partner did a social distancing meeting with the entrepreneur twice in San Jose, but I didn't physically go there. We met him at least 10 times over Zoom. Due diligence all done through Zoom, and everything is like on Zoom. So this is a year of Zoom, really.
Right.
But at the same time, I think the key thing in terms of us, I'm definitely seeing, I love to see hear what Jennifer has to say. Valuation actually have gone down for us. Just in the last 3 or 4 months. I think it depends on what you're doing, right? I have company doing amazing. There is a company that doing basically gaming chat as a service, and they're going gangbusters.
Right.
And in this sense, I think it really depends on what you're working on. And valuation is adjusting. And then some of the companies are also going through a tough time where we have to reserve capital to save some of them. So it's definitely a really, really strange time.
Has it changed your investment thesis at all before I go to Jennifer here? Has it, or even areas of focus? Have you decided, okay, we might start investing here, or just your overall thesis, business models, anything?
I think at least for us, I can't speak for everybody else, like our fund setup is for 10 years, right? So although I hope really that COVID will be over soon and won't last for 10 years. Otherwise, we should change our investment thesis because everything is over. But I'm still optimistic. I think this is a crisis that hopefully will be over someday. So our passion for investing in developers' tools, enterprise API, that won't change just because of that. But in terms of like the pace of investing or how we should think hard about COVID could impact our companies, that push us to think much harder than before. But the general thesis haven't changed per se.
Right, that's great. Jennifer, sort of same question. How are you feeling? How have things changed, and has it sort of changed your thesis or approach to investing at all?
Right. There's so much that could be said about it, right? So yeah, the initial reaction was, all right, let's make sure the team is healthy. The people in our network are healthy. Okay. Next, how's our portfolio company doing? How's the portfolio doing? I was really impressed how quickly people took action to reduce burn, get PPP, make sure they had enough cash in the bank. On the investment thesis side, we took a hard look at it, and I'm surprised how little we've needed to change it. I think to Edith's point, this is long-term investing, and whether it's public markets, private markets, you need to have a view for the long term when you're investing in equity. Fortunately, we've always been valuation sensitive, so it's a great time from that perspective. Cost efficiency sensitive, so we were able to stick to our knitting, to be quite honest. There are tweaks on the edges of the thesis in terms of what companies we might look at. So in a recession, there are certain sectors that are less appealing, where it's going to be the first thing to go when a company needs to cut its operational budgets. And of course, hospitality, travel, there will be opportunities in those sectors, but one has to be really careful about where they look. But I've been encouraged, one trend we've seen, we're finishing raising our next fund, and we paused for a while because things were so foggy in April and May and people needed to breathe. Now we're seeing an acceleration, a doubling down, because it is, unless the world disappears in 10 years, because this doesn't go away, it is a fantastic time to be investing, as long as you're very careful and you stick to the basics, like financial basics.
And this is for both of you, following on that, but this is for both of you. Has it, in terms of the companies you've already invested in, and of course you probably have a board seat, if not more than one, what's been the advice to the companies in terms of, is it just more tightly managing their money? Any advice for them in terms of management style and operations, or being more efficient? Are you helping them in those regards as well? And I'm sure the boards as a whole are, but that's open for both of you in terms of how you're helping your current portfolio companies during this time.
Sure. I can jump in just to expand on what I was saying. So we do have, we take board observer seats on half or more of our portfolio companies. Since we're co-investing and not leading at this point, we're not taking the actual board seat, but we have a seat in the room. I've been actually surprised how little our CEOs have needed our advice because they were on top of it. But they wanted to bounce things off. I think a very common held thing is make sure you have 18 to 24 months of cash because there is so much uncertainty. So make sure you're in a good cash position. Do weekly, monthly, whatever you need to look at the cash, look at the impact on sales. That was a big unknown, impact on sales in Q2, Q3, we still don't know. In many cases it's better than we thought it would be, but great uncertainty. So really manage that cash, manage that burn, but also focus on what you need to focus on to drive revenue, keep pushing up revenue, and make sure you're not cutting muscle needed to grow. We want to see companies not just survive, but grow. So it's a great clarifying moment for where they spend their resources. And there are things that some companies are going to have to cut off their wish list.
Right.
And that's okay, right?
Your thoughts on that?
Yeah, it's interesting. So obviously when San Francisco first shut down, I believe it's March, was it March 15 or 12? I don't remember, or 16th. That day, like all of us sort of like shock. And I remember our partnership sat down and say, even though we obviously, we're okay, we're very, very lucky people, but still, like, what do we do now? And we wrote an actual very, very long message to all of our CEOs and basically say, now is the time to act, and echo what Jennifer is saying. I think, and remember, like, basically 2 weeks ago, Sequoia actually wrote the Black Swan event, and hey, like, you guys need to be careful. And so we looked at that, we're like, well, this is not just a Black Swan event, this is the event for the decade. Right. And I remember the conversation I had with some of my family in Beijing, and I asked them, hey, how long did it take you 17 years ago to recover from SARS? Because it happened in Asia before. I almost fell off my chairs, and my cousin said 2 years. Right. And when that happened, we wrote a very, very long post to basically wrote down on, regardless is, from a product point of view, from sales, marketing, partnerships, every revenue projection, finance, people, in all facets of things, we essentially, some of our key holdings of companies, we went through this whole exercise and say, guys, how are we doing?
Right.
And at the same time, not to lose track of short-term survival and a long-term view of how this is actually changing course of certain companies because of this crisis. There's a Chinese saying, crisis in Chinese is actually like danger and opportunities, 危机.
Right.
And 危机 is the perfect thing, right? When there's danger, is actually opportunities. And I think this, for some of our companies, are doing amazing, right? So from an investment point of view, if you are on telehealth, online education, online exercise, and isn't it funny that all of us are buying a lot of bread, ease, and gardening, and Peloton? Like, these are things that you're sort of like, wow, yeah, I'm doing online yoga every day. I don't need ClassPass anymore. There are actually quite a fun, exciting opportunities. But right. So I think for new investment, it's super exciting. But for existing investment we have, yes, we have to save some of them. And it is, and I absolutely think like the SoftBank days is over. Like, there is no more insane $100-200 million investment anymore with no revenue growth and just hypothetically random valuation. So I think as an investor on the on the buy side, I think Jennifer and I are really happy in that sense, I would guess.
Yeah, it's so much healthier finally. And, just expanding on the portfolios, other than dealing with the negative stuff, I'm sure you've seen this too, either some have found the opportunity that COVID presents. One of our companies, they're called Acern, they're in New York. They have a great AI platform for the financial industry. Without getting into the weeds of what they do, they were helping investment banks make their decisions on buying. Well, the day after shutdown, they get the call saying, help us with risk management now, right? And so, a fantastic new opportunity to target, right?
Yeah.
That's and building a little bit and getting into the meat a little bit of some of your theses and things like that. Jennifer, I know we talked about sort of the network effect and the exponential, looking for exponential growth that tech and network effect can drive. And I guess I'd like you just to share a little bit about that. And of course, Edith, just jump in and into the conversation as well. But what I'd like to know about the network effect, and I think we all know the power of the network effect, particularly in investing, are you seeing, because of what's happened, it could be like if it's a consumer product, now we have a TikTok. If it's a B2B product or something, now we have a Zoom. What's different about, or what's new about the network effect, whether it's a new platform that you think can really drive a network effect, or are there other things about the network effect that will change because of what's happened and moving forward? So maybe just a little bit of the philosophy behind that, and then if there's change, coming as it relates to the network effect.
Yeah, it's a really interesting subject that weaves in several things, right? So technology in general has an exponential effect. It rapidly advances as prices fall. It actually has a deflationary effect in a way, with massive benefits and impacts that the human brain doesn't necessarily, brains are not good. Research shows we don't understand exponential numbers and growth very well. It's hard for us to picture them. So when the smartphone comes out, who envisioned the massive societal changes that can come from that to a TikTok today, right? On the phone, or the combustion engine and how that really drove suburbs, and other things that weren't imagined at the time. So you weave that in with the network effect of things like open APIs and so forth. We're talking rapid disruption opportunity in several segments. Right now, people, of course, are talking about the impact, because we can't go to work, the impact on industry, on agriculture, on learning of, how you have to add the network effect because we're at home, and you add new technologies like AI, machine learning, and so forth. It's hard to see where it's going, but we know the direction it's headed. We just can't picture everything that's going to come out of it, but it does represent significant opportunity and risks, right? There are clearly societal risks to this level of disruption. So it's a very high level, view of it. But as an investor, you always want to look for the new categories, the category changers, right? Absolutely. Airbnb came out in 2009, and it had a big disruption of the hotel industry. Now they've obviously been hurt, but they're starting to see an uptick because people would rather stay in a house with a kitchen than in a hotel in downtown New York, right? So.
Exactly. And Edith, I know, sort of building on the network effect in one plow, you talk about platform changes every decade, and I know you have one that you think is really going to be a disruptor. So if you'd like to build on that a little bit.
Yeah, so I think, Drew, when you and I first met, it was like the height of the, application, right? So iPhone, I think was it 2007, 2008, around that time? Yeah. And it was a boom of everything related to mobile. But of course, Facebook is basically sort of in the 2000, where everybody's on Facebook. Oh my God, it's amazing. And because of the rise of smartphone, then the rest of the world, I would say, US less so, but the rest of the world, practically everybody live on WhatsApp. And I think what's happening literally just in the last 90 days, you see Zoom, which is amazing, right? It meant to be a business conference and video conferencing, now become a consumer app with over 300 million MAU. That is turned into a consumer app, and God bless them, like they can scale up, like maybe they were built for that. That is amazing. So because of that, and we saw that too, like during the App Nation Day, where you see certain killer app, then infrastructure kind of come along with it. The App Store was built after the first iPhone, first app first came out. So a lot of the developer infrastructure sort of built because there was a couple of killer acts. So what we're saying now, which I think my week highlight was last Friday, I have one of my companies went IPO, which is amazing. And the ticker is API, which is an awesome ticker, and is basically Twilio plus Zoom as a service. And as named as Agora. So Agora have done an amazing job because their revenue for the last 90 days is basically their last 3 years combined. So if you can imagine some of these activities related to social, of course, we can now think about, like, as much as I really, really like Zoom, not all businesses going forward will feel comfortable have all our business conversation to be on somebody else's platform. So you can imagine, regardless is online dating or telehealth or education or any sort of customer service, I can see maybe more and more they want it to be on, not necessarily on-prem, but on our own cloud rather than somebody else's cloud. So I think this is a big, exciting platform shift that I look forward to, in addition to Agora and the API, more and more other video infrastructure, security, privacy related things, because now the CISO of the world need to think about, hey, are all my team working from home, are they protecting themselves? So I think there's really exciting time and tons of opportunities there.
And this is just a bit of a sort of a fun question, but as we're sitting here talking about Zoom, but related to, like, if you have, portfolio companies and companies you've invested in, and they're suddenly doing very well for whatever reason, what is your advice to a company like, let's say, a Zoom? If you were their VC, the valuation's so crazy high now, I don't really know who would want to try to buy them at that price. But when is the moment? I mean, what is your advice to companies that are doing really well? I said we can keep growing and building value. Just sort of a fun question as a side. What would your advice be to Zoom or any other wildly successful company at the moment in terms of when's the moment to sell, and when do you just keep on plugging away?
Yeah, it's definitely a company by company decision, but that's a good example. They're way up there on the hype curve, and how are they going to keep growing to that next level? If I owned their stock, I'd probably be willing to sell it on the secondary market right now. Not saying everybody should do that. Depends on your philosophy. We're not necessarily unicorn hunters. We're happy with a nice second, third base hit and keep turning that quickly.
Sure.
Having said that, we've got 5 or 6 IPO candidates in the portfolio right now, but most of them will get acquired, right? So it would really depend on, do they have a strategy and a foresight and a team to go to the next level? If so, why not? And do they have the cash to support it? But a non-tech example, we were talking about this in my family at breakfast the other day. Remember the Zhusu hamster pets that were the big?
Yes, absolutely.
Where's that? That's a company that then poured the profits into new products that probably didn't sell. I'm curious where they're at now, right? They were at a height and probably should have sold to Mattel, right?
Yeah, right.
And should Zoom be trying to sell to, IBM or some large enterprise company to compete with Microsoft and Google on these platforms? I don't know. Cisco could maybe use it. But,
right. Edith, any thoughts there? Both with Zoom for a little fun, but also just, when you have portfolio companies that are really on a high growth trajectory, and when is that moment, or maybe even take another follow on investment or debt or whatever it might be.
I think because of the Agora experience, I wish I invest more. and I don't know, like knowing what I know now, and it's sort of looking back, I still feel like when Drew and I met, I was working on Dolphin browser.
Right. Yeah.
And so I always sort of want to think from an entrepreneur point of view. And now looking back, I think I am definitely a unicorn, maker, boiler, cooker, whatever you want to do it. Because in my head, I'm like, you go big or go home. And I learned that from our partner, Alfred Chung, who's the founder of BEA Systems. And one of his big mantra, his experience and story was they raised $50 million from Warburg Pincus for BEA. And that was the sole investor. And when they came in, they start buying companies. and sometimes and actually and BA ended up got sold to Oracle for 8.6 billion. So good for Alfred. But the key thing is actually, I think even though looks like Zoom is the King Kong today, I think when you get too big, there are always somebody like incumbent is going to go after you.
Right.
Yeah.
And
Right.
in order to stay on top is like put myself in the entrepreneur shoes is, you know, you go big or go home, but how do you stay on top? How can you continue to move fast when you're this big? Is hard. So I think what Oracle has done really well, which including my previous company, Siebel, was also acquired by Oracle, is they do a really good job doing M&A and doing integration. And they prepped, at least when I was the receiving end being acquired, we went through a 6 months integration before I went over to Oracle. Not just from a share price but psychologically, they want to make sure that you don't leave. And how do you actually take advantage of all the team, product engineering, customer don't leave. And I think Oracle definitely some big conglomerate have done really, really well over the years. And I think that in that sense, that will be my advice on Zoom. Just kind of think about that. Don't get too complacent, because you just never know. A crisis could make you or also could break you. So
you never know. One thing I'll add about Zoom, what they've managed to do is become the brand.
Right.
They're the Kleenex now of
They
which must be killing their decades old competitors. Like you can imagine the arguments around the Zoom table about why something that's 20 years old failed. Did not have its Zoom moment, but Zoom became the verb, basically.
Absolutely. It did become the verb. It's a branding dream, a brander's dream.
It is.
And we had the head of digital at CAA, the talent agency, on a couple of weeks ago, and they're absolutely looking at Zoom for paid platforms for concerts and things like that. I mean, it's really going to extend across. So please send your questions. I see a couple coming in. Thank you for those. We'll get to those in just a second. Let's talk money, just because I know we have some entrepreneurs out there. And I guess my question is, I don't want to talk about sort of, valuation so much as, what's the state of the investor marketplace? Certainly right before this crisis, it was a bit frothy. And it's frothy when the institutions are getting in there and the pension funds are getting in there and the private equity funds are getting in there and everybody's writing big checks, and SoftBank has a $200 billion fund, and the money really seemed to be flowing. And I always get a little concerned when it starts coming from, pension funds and other sort of institutions. Has that money gone away? And if I'm, because you guys work with so many other investment partners in funding these companies, if I'm an investor, where should I be looking for investment capital besides sort of traditional VCs, regardless of whether those VCs play at seed or Series A or B? Are those other sources of money still out there, or have they now sort of, left the party? And either of you can jump in.
I guess anecdotally, it seems to me like there is still tons of money out there.
Yeah.
There's tons of cash out there. It's harder to raise because the power balance has shifted from entrepreneur to investor. I think if you're just starting out with a brand new idea, brand new company, my advice, no matter what the time, is do it if you can dig in your own pockets at first. Bootstrap it. You should not necessarily jump on that dream of being an entrepreneur if you can't afford it, especially now, right? And we will see a lot of people, because of all these job losses, some people are going to go out and start a company, even if they can't afford it, because they need to do something, right?
You always see these downturns produce great startups, and lots of them, right? I mean, even if it is just because you've been laid off, it's like, it doesn't matter why, but it happens, yeah.
But I'm still seeing active angels, active accelerators, active VCs, active PEs. One area I'm kind of watching is corporate venture. If they're off balance sheet investing, corporate venture may shrink. It's really grown in the last few years.
Right.
Maybe it's going to shrink because if a company has to do cutbacks, it's a really quick thing to go.
Right. Or maybe the corporate venture, because we've been covering open innovation and dealing a lot of CVC. And maybe
Yeah.
it's just because interesting, some like Microsoft don't necessarily invest just in companies that are strategic to the company.
Yeah.
Maybe the investments get more strategic and focused, maybe, I don't know, or maybe the opposite. Edith, thoughts on some of the investment partners and where the money is? Do you agree with Jennifer here that the money is still out there, and who's writing checks?
Well, money talks, and actually this morning we had an investor council with Qualcomm Ventures and also Telefonica, and both Quinn and Genia were quite bullish actually. In fact, Quinn, I think last month have an exit, and so they're very like big on investing in 5G. I agree with Jennifer. There are definitely quite a few of corporate venture, very theme-based thesis. So if I'm sure there's plenty of entrepreneur in this conversation. I think if you're doing research and thinking, hey, where can I find the money? Is just to think about. Of course, I don't want any of you to say, hey, we're selling mass, or PPE, and no, like, don't be so just chasing after a trend, because we don't know how long this is going to last. But certainly we're seeing learning from China. Actually, Q1 it definitely dropped about 30% year over year in terms of investment dollar, but the investment that pulled the trigger are a lot of corporate, and actually we're seeing some and also much more growth stage rather than early. So big money is going after sort of the growth stage.
Yeah.
And very specific on healthcare and any pharma and biotech. People are jumping all over it. In fact, like doing a few $1 million to a biotech company just make absolutely no sense. And I am not qualified to invest at all, but we're definitely seeing tons of money going to very specific category of industry. So therefore, private investor, or I saw like Mubadala, the big family from the Middle East are pulling trigger on the Reliance, was it the big telco in India. So you're seeing like more cross-border, and now like with US and China with CVS, there's China money cannot come in. So I'm seeing the Tencent and Alibaba of the world going to Europe, going to Latin America, and then trigger so many investment in the last 8 weeks into fintech related investments.
Interesting.
So it really depends on what you're working on, and you can always find very targeted investor that could be good for you.
That's great. So just an alert out to Kendall and Jordan. We're going to go to your question in just 1 second. Edith said something that made me want to ask one more question, and then we'll go to Jordan Green for a question from our audience. So both, again, Edith and Jennifer, for you, but Edith, you talked about, just as talking about startups, sourcing startups. So, in the past, you certainly had opportunities to be out there networking, right? You could go to conferences, you could go to a World Congress that has, tons of startups there. You go to hackathons, you can walk over to Stanford, to be cliche or whatever, to see what's going on over there. But how has it changed now that you really can't get out and network in that way? And has it changed fundamentally how you're sourcing these startups that you're considering investing in? And for startups, like, is there, and for people looking for investment, how do they break through now that the primary of only sort of way to get through is to call you or send an email, or but just question on the sourcing startups now that you're not out there, physically in the ecosystems.
Yeah, it's not being out there physically, how to source and then how to close, right? You just said they did do a deal finally, where they hadn't met the people live. We haven't done that yet. It'll probably happen. Sourcing, we look at some 3,000 things a year, believe it or not. When we look at where we actually invest, though, a large percentage are invited in by other VCs, somebody on our team, or from one of the portfolio companies. It tends to still be a very close in-network referral versus random companies, and from Products Account. Or Products Account network is a great source for us. So on the sourcing side, it's maybe gone, maybe the funnel will go from 3,000 to something smaller, although we are inundated with online conferences and pitch sessions and and so forth. So I'm not seeing it there. It's the impact on due diligence and building that relationship that still remains to be seen.
Yep. Edith?
I sort of loved it because on a regular day I'm on Zoom all the time, but other than fatigue, literally I could be
Yeah.
seeing in the morning I'll be seeing entrepreneur from Europe,
Right.
from the Middle East, from Israel, and then in the afternoon when sunrise in Asia, and I get to see my friends in China and in Hong Kong and Taiwan. So I think now it actually make all of us, in some sense, less biased in terms of physical location, because they could be like in Palo Alto, or they could be sitting in Hong Kong. I wouldn't even know. So I actually think that this is a really great opportunity for us, and also for founders, where you can literally be anywhere, and in some sense it's a little bit less biased because we're all stuck on the same boat. And it make all of us a lot more purposeful, like in terms of connection. Drew, if it's not because of you, we would not be here. And we know that we're doing this because we want to help contribute and support you on doing this. And so every single conversation is less sort of like hanging out, buying coffee. And in fact, it's even more efficient. We're going in and I wrote an article, which is sort of hilarious because now we have this Zoom shirt going on, right? So who knows what, we could be in shorts right now, but who cares? So in that sense, a lot of good discipline, I think now we're training, at least for my team.
Yep. So in terms of the question, I'll go ahead and read it. And it really is sort of looking at minority-owned businesses and the opportunities and investors. And we all know that Silicon Valley, like, we know the issues there. And being born and raised there, I understand them as well. But, talk to us about, are you starting to look at minority-owned businesses and startups, and how can the Valley and how can the investment community improve on that in terms of more opportunities, more capital, more engagement, engaging those ecosystems in terms of this issue? I know it's a complicated issue and sensitive, but would love your thoughts on that.
Yeah, it's a great issue to bring up. Mighty Capital, we're not an impact fund specifically targeting minority-owned businesses, but we do have the, diversity and inclusion as part of our culture. Having said that, over the last 2-3 years, I've definitely seen an uptick in the number of minority-owned businesses coming to pitch and startups, whether it's women or people of color or whatever, and more diverse teams in general. It is kind of funny though, if I go to a website to look at the team, it's like, okay, white guy, white guy, white guy, white guy. The last picture, some woman on the bottom where okay, they thought they better add somebody on the webpage because they're fundraising. But it's definitely on the uptick. And I think though the real shift that has to happen is that the flywheel effect of successful CEO, the serial CEO, the second time, third time, much easier to back somebody who's been successful in the past. And so it's really about communities building their own network of support as they are successful, then it will just breed more and more of that, is my opinion. So, but very encouraged to see it. I do like to see diverse teams in general because I think it results in better outcomes.
But same question, Edith, in terms of, how the Valley can do better, how the investment community can do better in terms of minority-owned businesses and entrepreneurs.
Yeah, I think I applaud for the fact that we are bringing up this challenge and issue so that out in the open and talk about it. And I started to see there's obviously venture funds that particular focus on that, but a little bit contrarian type view. I actually, by the way, even though I guess I also check the box on minority, but I don't want being boxed in. Oh, because of your this, therefore, I should give you opportunity. I don't want that. I actually I get this opportunity because I'm really great at what I do. So don't get me wrong. I actually think that it's definitely an issue. But once the issue that get bring up, I think all of us, regardless you're a minority or not, you want everybody to take you seriously, not because you are X, Y, and Z, because you are really great at what you do. You're running an amazing business. So it's great to now you have more door opening up for you. But I'm quite not sure that if you are like, oh, I'm going to have this kind of fun just for this group of folks, or this is just for that. No, actually, what we need to do is the normal fun, to embrace more minority, whatever you want to call it. Like, we should bring everybody up in the same table, not a different table.
Right.
I found it really strange that, oh, I just wanted this fun just for this group. Then you box them in even more. I don't want to be in that group. I want to be this group. So I think it's good for us, like, to be more aware and more welcome. And that's really should be the attitude. And I think sometimes maybe, like, I can't say, like, I don't understand a lot of the different culture or different background. And now, yep, I'm more aware. That's
Right.
really to be, this whole movement is all about, to more acceptance and inclusion, rather than, oh, great, let me push you there. No, that's completely the purpose.
Right, exactly. So we have just a few minutes left. If you have any questions, send them in the chat string. One question that I also have is, as we get towards the end, I'd like to look to the future a little bit. And I know, data is a huge area, and there could be so many sort of data related applications. IoT and the 5G opportunity that may have with mobility and things like that. Machine learning. I suppose if where are you looking to invest in the future that maybe you don't have a lot of investments now, but you really see, regardless of whether it's because of COVID and the new normal or not, that you think is the right place to invest in the future, and what types of companies are you looking for that might be a little outside of your sort of typical portfolio company? And either of you can jump in and discuss amongst yourselves too.
I think technology should not be treated as a separate industry anymore, right? So every company needs to be a technology company, a company that uses technology. So where tech and big data can drive efficiencies or new business models in more traditional industries, that those can be hard to find and invest in because there's a lot of baggage from some of these old industries. So I think that's one area. Another area, I have a background in security. It's not an easy space to invest in, even though it's massive for a number of reasons, but keeping my eye out for those security, privacy kind of components, because as much as we want to go forward, there's some guardrails are needed. And I have a background in mobility as well. So talk about two contrarian, markets, but I think security and privacy, risk management are the things that can keep us out there as well. So those are two specific areas for me.
Yeah. From my side, we are, well, obviously I'm big on API. You guys know that already, but more specifically, we've been looking a lot at embed fintech related infrastructure. So things like banking as a service, like all the bank connector, like lending as a service, card issuing as a service, because this particular industry is very, at least in the US, state by state license, a lot of compliance issue. It actually takes a lot of work. And Jack Ma famously say, it's not fintech, it's tech fin. Every tech company wants to be a bank, right, either you like it or not, because I think for a lot of the big platforms, if you think about like Facebook, and now actually WhatsApp launched their payment in Brazil. I think that's the first country that's going that way. Apple is work with Goldman Sachs and launch their Apple Pay and cards. It's coming. So if you're not the Apple or Google or Facebook, so that the in between, how do you actually launch and monetize, not purely just come for advertising, thinking about financial product as a revenue source. And this is something that's coming. And it's we're launching, shameless plug, I'm actually launching the China Internet Report next week.
Yeah. And
one of the things that's mind-blowing for me, even for Ant Financials, for Alipay, payment, actually the financial product eclipsed, generate more revenue than payment services now, even for Alibaba. That's crazy.
Yeah.
And you're talking about insurance, wealth management product, lending, are making more money for Ant Financial than payment services. That is mind-blowing. So this is a trend I think that I'm super excited about.
And you talk about Alibaba and Jennifer, I know you don't have a lot of China exposure investment, but please jump in on the China conversation. Edith, I know we wanted to talk a little bit about China because it is such a difficult time between the companies, and how has this affected the startup sort of ecosystem and investor ecosystem both ways? Like, clearly I would think, if you're an American investor and you want to invest in a Chinese company, being there and going there was even maybe more important than sort of virtual connections. But where are we with China and US, sort of the relationship there as it relates to startups and investors? And is it now nearly impossible to invest either way? And what will that future look like? I'm sure obviously the election will have a lot to do with it, but what's the state of US China sort of investor startup relations and that ecosystem?
Edith probably does know more about it than I do. I'd say it's been a friction point though for a few years, and it's definitely worse now. It's a huge market though, so we want our companies to be able to sell in there. A lot of them are manufacturing something there, so these issues, we'd like to see the friction go away, I suppose, in the right way. And in healthcare, it'll be interesting to see how much we now make that like a national security interest, right, in certain industries, right? So I don't think the friction is going to go away, but finding ways to deal with it, how to sell into China. There's certainly a lot of they're a big part of the investment ecosystem here as well, right? So the right ways to do that where CFIUS isn't a problem, it is something we have an eye to. When we look at a company and their China strategy, we need to understand the risk and the opportunity to be able to really analyze the impact for that particular investment.
Yeah. Edith, I know you have thoughts here. I know you've gone back and forth many, many times, and you're in touch with people constantly all the time. And so what are your thoughts here now on China and the United States?
I think I'm just sad that like technology being used like as sort of like top of mind for all politicians on a daily basis. I hate it. And I think as an investor and as a being in technology is just unfortunate. We've been pulled on the other side. I think from an entrepreneur point of view, if you're an entrepreneur, the market is still open for you, and it's really is a huge market, and is a market where I think if you're going after more consumer is definitely harder because there's so much cultural differences. And if every entrepreneur you're working on anything related to social or news, productivity, sorry, I would say you should forget about it because it's very, very hard. But if you're talking about things that, like what Jennifer is looking at, or what I look at like a lot of more infrastructure related things, I mean, Chinese developers still code in English, okay? There is no Java in Chinese, okay? Like actually Java is Java, there's no Chinese word for it. So in that sense, I think that it's still huge market. There's like 1.3 billion, 1.4 billion people, 900 million internet users. There's a huge needs, but B2C is very hard. In terms of investment, like VC funds like Sequoia or TPG or Warburg Pincus, these are all super active in both China and US. And in that sense, but they all need local team. Raise capital, we are a new fund, of course, one day will be at the $1 billion level, but we don't have a team yet. I'm traveling back and forth. We can't travel now. So nothing is stopping Jennifer and I to go invest over there, but it sort of doesn't make as much sense just because it is really, really far away. I love China. I think it's such an exciting market and everything. Every time I go there, I learn more than I learn here. But we should be mindful. Doesn't matter you're a Chinese company or US company, is if you start here, make sure you conquer your homegrown market. And then when you are maybe, I don't know, BC stage, maybe even that could be too early, then start to like go out to the world. But then don't necessarily take my word for it because every single business is a little bit different. But I just I sometimes roll my eyes when an entrepreneur is like, hey, I want to take money from this place because I'm going to go to this place a year from now. I'm like, you haven't even built your product.
Right, exactly. We're going to wrap up here in a second, but I had a question about, and I've been asking, regardless of whether we've been having Fortune 500 chief digital officers or venture capitalists or whatever, is talent and leadership. And you guys work with a lot of founders, obviously, and they're CEOs, and some are serial CEOs. And I guess my question would be, I was going to ask something along the lines of, what do you look for, obviously, right, in a CEO, as well as the full management team when you're doing due diligence. But I guess my question would be, are you looking for anything different now? Because of the crisis, and companies are working, the companies are working virtually. Maybe it's more stressful. Whatever it might be, are you looking for something different in entrepreneurs and or their full management teams as you do due diligence on companies that you're considering investing moving forward? Or is it still the same qualities that you look for? How is the talent leadership assessment sort of issue changed for you, if at all, given what we've been going through?
That's a good question. Because we always look for excellent teams that are very complementary. I think the seniority level expectation is maybe increased. Looking for a certain amount, maybe a little extra grit and tenacity and skin in the game. We want to make sure that they are going to be committed to seeing this through. And that's been a sticking point in a couple of cases. We want to know they're in it for the long run, that they're really committed to it, that they're up for a fight. But always looking for really complementary teams on the tech side, the go-to-market side, understanding how to move towards an exit. Like, are they thinking about the end game and going backwards? Or is it, well, we'll just build a big company and see what happens? I really think you need to start as you mean to going on. But certainly that extra level of commitment and energy and willingness for the work. If we're in a recession, it's harder. It is harder, and you have to make tougher decisions. You have to make those hard decisions much more quickly. But that enthusiasm and passion to do it, maybe not just because of not in spite of the environment, but because of it, is very appealing. And certainly coachability, willingness to take advice and be very open and honest because of the uncertainty and the rate of change right now. Open dialogue.
Yeah. Edith?
I think this is a time where we're calling for making fast, tough decision even faster, because if you drag on, is tough because you don't see each other anymore. And communication, I know a lot of my founders who are engineer, product person, they are just such an introvert. And
right.
But this is a time that you need to over communicate, because we, in some sense, it just pains me, to see their, I think there was one case that was a bird, they lay off 400 people just over Zoom. That is poor form of communication. Right. And it's just something that is sad to see. And this is when that's going to separate the boys from the true man. Funny that it, girl from women too. Okay.
Right.
Where this is when you really need a wartime CEO to make it.
Yeah.
And we're very lucky we are on the other side, but we're not only the cheerleader, we're also the sounding board for you. So hang in there, everyone.
No, that's great. So let's wrap with, I'm a Silicon Valley native myself. My mom's still there in San Jose. They arrived in 1962, and I arrived in 1969. But, so it's sort of this, every time there's something happens, there's the articles of Silicon Valley's, imminent demise. I've seen a lot of the ups and the downs as you guys have as well. But, now there's lots of articles of, now with displacement and people working virtually, and now I can maybe move off to Tracy, or I can go move somewhere and not have to commute in for an hour and a half, and all the people are going to leave Silicon Valley and all that. But what are your thoughts on the Valley itself, really still as the epicenter of technology and investing? And is it because of the ecosystem that keeps it intact, or do we, does Silicon Valley change, and do you see more of sort of a, it gets distributed a little bit more, or is Silicon Valley at risk? But let's end with that.
I came in 97. So yeah, I've seen the ups and the downs and this is it. You know, the South Bay is going to empty out, blah, blah,
Right.
blah. And look what happened to like South of Market in the last 10
Yeah,
years, right?
exactly.
I think it'll continue to be the epicenter, but to your point, a little bit more distributed. Certainly leadership teams like to be here. The reality is, depending on the nature of your business, this is where execution can happen quickly, where a lot of the acquisitions happen, a lot of the knowledge transfer, but it's certainly, you know, it's still going to be an expensive place to live. Young families don't necessarily want to move here, so maybe fewer people, but still the heart of a lot of business is going to be here, in my opinion. Glad to see it developing in other centers. So we've seen a lot going on in Boston, New York, Toronto, Austin for a while. Atlanta, Georgia recently has been a bit bubbly.
Yep.
So
Absolutely. Edith, same thing about the Valley. And then Jennifer made a good point. Any other interesting pockets out there across the country or even the world, other cities where you think there's a lot of talent that's been bubbling up?
Well, I think like in addition to Silicon Valley, Tel Aviv, Beijing, Hong Kong, of course I'm biased, Singapore, they're all like pockets. And within the US, Salt Lake City, I think is interesting. Jennifer mentioned Atlanta, Chicago. But I think, you know, when Jack Dorsey first said, hey, everybody from Twitter can work from home forever.
Right, yeah.
And I was thinking to myself, he probably just want to move to Africa, and that's why. But I really think that now Silicon Valley is a spirit, and it's that spirit that it's okay to be somewhere else, but that attitude of like high growth, never take no for an answer, and have that grit is something that hopefully wherever you are, you will carry that with you. So.
That's great. Well, we're right at 3 o'clock, so we'll wrap it there.